Dividends are subject to double taxation, huge sums of money blocked for pennies per year. Most of us don't have the money or time to grow the dividends into something livable. These are a few reasons why growth-oriented investors who opt for capital gains over cash flow don't like dividend stocks, which I do have some thoughts on. But in this video, we're actually going to be talking about the inverse of this, why dividend investors don't like growth stocks. So I've been dividend investing for about a couple years now, and my $36,000 portfolio currently pays me almost $1,850 every single year and growing, which amounts to about $150 of dividends coming in every single month. But before all of this, before I had any sort of affinity for this style of investing, I actually was a growth investor. I was going after those momentous gains in share price, and in my portfolio, I was holding stocks like Dropbox, CRISPR Therapeutics, Beyond Meat, Virgin Galactic, and even one of the ARK ETFs. From owning stocks like these, I made some money, I lost some money, and overall, I learned that there are a few reasons I'm just more partial to owning stocks that do pay a dividend as opposed to stocks that do not pay a dividend. The first of which is that without the dividend, I feel like you are sort of slave to the share price. And what I mean by this is there's really only one way to make money with growth stocks. With these, your success, your return on investment is solely dependent on the share price of that stock going up, which is a position that I personally don't want to be in because I can't control what the market is going to price my stocks at on any given day. Things could go up, things could go down, and at least this year we've seen a lot more of the latter. So far in 2022, the Dow Jones is down 17.7%. The S&P is down about 21.5%, and the NASDAQ is down a whopping 30%, which don't get me wrong, guys, my portfolio is down too. Year to date, I'm down 7.6%, but I'm not concerned about that at all because my success as a dividend investor is not completely tied to the share price. And believe it or not, it's actually good for us dividend investors if our stocks become less expensive and go down in share price, and I'll explain. Let's say you have a stock right here, guys. It's at $100 per share, and for every share you own, you're getting $3 per year in dividends, which gives you a 3% dividend yield on that investment. But now let's say that stock goes down in share price and becomes less expensive, and now it's sitting at $90 per share. Now, so far you have an unrealized loss of 10% because it's gone down in value, but guys, take a look at that dividend. You're still getting $3 per year even though the stock went down in share price. And now because the share price went down, if you bought more of that stock at $90 per share, you'd have a 3.33% dividend yield. So there's a couple things going on here. Number one, when the stock goes down in share price, you're actually getting a better cash flow return. And number two, because the share price went down, you're able to buy that same $3 in cash flow for less money. You're able to make your invested money go a lot farther. And speaking of doing more with your money, I am so excited to tell you guys about today's sponsor. Now, many of you guys know I just moved to Las Vegas, which is saving me a ton on living expenses. And while doing this has worked well for me, I realized that completely uprooting your life and moving hundreds of miles away is not feasible for most people. Having said that, here's something you can do right now to save money. Switch to Mint Mobile, the sponsor of today's video. You might already know Mint Mobile if you've seen those funny ads from Ryan Reynolds, who is also an owner of the company, but let me quickly tell you about how awesome their service is. First of all, making the switch could not have been easier. Thanks to their digital eSIM cards, you can sign up and activate immediately right on your phone from the comfort of your home, which is how I did it, guys. It maybe took me like 5 minutes max. And you can even keep your current device and phone number, making it even more convenient. Now, as far as the actual service goes, I couldn't be more pleased. Reception in Vegas can be somewhat spotty, and I have yet to notice even the smallest increment of fuzz on the other line, and the same can be said for using the internet. Whether I'm buying stocks, reading an article on Seeking Alpha, or watching a video on YouTube, Mint Mobile's data comes through. And I actually couldn't tell a difference in speed or anything, guys. It's really top notch, and all Mint Mobile plans include unlimited nationwide talk and text, plus lightning fast 5G and free mobile hotspot. Additionally, Mint will show you how much data you use each month and will recommend plans that save you money, which is important. And they also offer a modern family plan that is super affordable and lets you set up with as little as 2 lines. Long story short, Mint Mobile offers premium wireless for as low as $15 a month, and you don't have to sacrifice a lick of coverage, speed, or data. Use my link in the description or right here on the screen, mintmobile.com/Ryan, to get premium wireless starting at $15 a month. Once again, that's mintmobile.com/Ryan, RYNE, for premium wireless starting at $15 a month. Make the switch to Mint Mobile and start saving today. Anyway, getting back to the main topic, the next reason I prefer dividend stocks over growth stocks is because someday when I'm ready to retire and live off of my investments, I don't want to have to sell shares of these stocks that I've just spent the last handful of decades accumulating. Like we talked about earlier, guys, there's only one way to make money with growth stocks, and if you want to lock in any of those gains that you made, you're going to have to sell some of those shares, and then what you're left with is a diminishing portfolio whose assets are shrinking over time because you sold them to pay your bills. Okay, this is not the case with dividend investing. Because dividend stocks are cash flowing assets, there's no need to sell the shares. You can just build it up to a level where you're able to live off of the dividend income, which is the entire point, and the best part is your portfolio will continue to grow. Many dividend stocks have a history of raising the dividend year after year, which means that your dividend income should increase with time as well, and some of these stocks offer these raises at very substantial rates. Like for example, Lowe's has a 5-year dividend growth rate of 18.77%. Love this company, that's super high growth. Bank of America's is even higher at a 19.76 5-year growth rate, and Broadcom right here, ticker symbol AVGO, has a 32.08% growth rate. That is some very substantial growth on the dividend. So instead of having to sell off my stocks and reduce the number of assets I own, I'd rather just hold on to all those shares, have them pay me a paycheck, and then allow them to pay me an even bigger one next year. Now this brings me to the third reason that I opt for dividend stocks over growth stocks, guys. I want that paycheck, okay? I'm after that passive income. Getting that cash flow is my main priority, and having said that, this style of investing scratches a different itch than a more growth-oriented approach. And no matter which style of investing you choose to adopt, you need to invest in a way that suits your preference and fits your temperament, which really is the bottom line here. No matter if you're investing for cash flow or investing for capital gains, the important thing is that you're investing it all. And obviously you can always take a hybrid approach here. It really doesn't have to be one or the other. But with that said, if you are a dividend investor, then you need to know about all of the great stocks paying you a dividend in November. So check out this next video right over here where I tell you about 15 great stocks that will be paying you a dividend next month and when you need to buy them to lock in that dividend. So click right over here and I'll see you in the next one.